have Prashant Panday, MD and CEO, now joining in. Thanks so much for being with us. Let's have you walk us through the earnings. There has been a recovery witnessed this quarter. What have been the key drivers?
Yes, in fact, the third quarter was a strong quarter for ENIL, and I guess it was a strong quarter for most media companies. Clearly, the reason was that the impact of the pandemic had started to fade in the third quarter, and Diwali was a strong Diwali this time. So yes, the third quarter results have been very strong for us as well. We've reported overall revenue growth of 17%, but within that, radio has grown faster at 23%, and our very important business, which is solutions, continued to remain under the weather, actually broadly reporting flat growth, primarily because governments were still not giving permissions to do on-ground activations and events and those kind of things. And therefore, overall, the solution business remained a little tepid. We did do business on solution, but it remained a little slow. Now, because radio grew very strongly and because our costs have been very much under control still, we reported a pretty strong underlying EBITDA number and a growth of 125%, obviously on low base of last year. And interestingly, the PAT came in strong at 11 crores positive compared to a loss of about 2.7 crores in the same quarter last year. So it's been a strong turnaround quarter for us. EBITDA margin, for instance, has shot up to 29%. And if I may just add over here that, people who know the radio business know that it's a very high operating leverage business. And typically when revenues rise, the margins and everything tends to grow pretty strongly. So we've seen that happen in this quarter.
That operating leverage was also supported by the volumes this time around, wherein that grew by around 20%. What were the factors at play here, and can we expect this recovery to continue going forward?
So, across the board, there has been a growth in ad volumes on radio. But segments like, very important segments like FMCG or BFSI, which is big for us, organized retail, e-commerce, these are all segments which have done very well on radio, and many of them have done very well through the pandemic. So it's been a sustained support and reliance on the medium. A few categories like auto are still a little weak, and we know the reasons over there, but they're now coming back in this quarter as the chip shortage reduces and the business gets back to normal. So across the board, increase in ad volumes on radio this quarter.
Well, yeah, e-commerce seems to be contributing to your growth, but perhaps that's the reason their losses have expanded given the fact they're expending a lot on advertisement. But let me talk about the solutions business, which you alluded to in the first answer. What are the other business segments looking like in terms of the growth drivers? What are you expecting for the solutions business?
Yeah, as you know, the general consensus in the country is that the COVID is kind of now behind us. And therefore, various governments are becoming a little more courageous in opening up the on-ground segment. You may have noticed that the Maharashtra government has opened up pretty much everything. So has Delhi opened up everything. The Mumbai mayor has been on record to say that by the end of February, she expects almost all restrictions to go. Now, once that happens, the solutions business will immediately recover. And in fact, if I may say so, recover quite dramatically, because a very key component of a solutions business, which is on-ground events and activations, had been virtually completely stopped for so many months. So yes, that part of it will recover very quickly. Also, another part of our solutions business, which is digital products, right, which we use to bring solutions to our advertisers, that's growing very rapidly. Even this quarter, our pure digital products grew by as much as 32% in the quarter. So digital products will do very well. On-ground will recover. Radio will continue to do well. So overall, I think the solutions business is expected to do very well in the quarters coming up. And I must point one more thing out to you over here, that the solutions business is an extremely interesting business because in Q3, for instance, we invested just approximately about 3.5 crore rupees in the business, but we made an EBITDA of approximately 9.5 crore rupees. So it's a very, very strong cash generating business if you run it adequately and well.
Right, Prashant, and finally, we are seeing a lot of your media streams come out with podcasts. Things have become a lot more interactive on the various mediums. Is that any sense of competition? Are you worried?
I think that as far as the podcast business is concerned, we're still at a very, very early stage in India. And if you were to look at what's happened in the US and in China, for instance, we have such a lot of catching up to do. So really, these are very, very early days. There are very few listeners at this point in time. I'm told that the numbers maybe 7 or 8 or 10 million at most, and this number could go up to 100, 150, 200 million in the next few years. So we are really in very early in this business. Also, in audio storytelling, which is a sub-segment of podcasts, I think we have some real strengths over there, because for 20 years, we've been actually talking to our people in a language that they understand, and talking about basically entertainment, basically about happenings, basically about stories which go around the country. So that's the space that we are very clued into. We know all the story writers, we know the producers. So I think we have come in early. We have come in with a product that is fairly differentiated. The bigger platforms that you named, Spotify, etc., cover a whole gamut of content. We, on the other hand, are focusing on audio stories and curated audio stories with that. So you don't have to browse through a million hours of content to find what you want. You get hand-picked stories that you will like.
Thanks, Prashant. We'll slip into a quick break then right here on the show. Be right back.